Hi, my name's Chantal Bradford. I cover institutional sales at Deribit. We are a crypto derivatives exchange focusing on options. We specialize in options. We're sort of the sixth, seventh biggest crypto exchange in terms of derivatives. However, we are, well, probably sixth now, not seventh. But we are now indisputably the number one in options. We've got a 94% market share of options open interest. And we're a lot more niche than our peers, so we only offer a few different coins. So we have BTC, ETH, and Solana. So we've got futures, perpetuals, and options in those contracts. And we've also got 16 USDC-linked perpetuals. The plan is going forward, we will be launching more options next year. However, we want to focus on cross-collateral at the moment, so it will be a Q1 aim for next year. I joined in March from the London Stock Exchange Group. I was at Curve Global, which was the interest, it was the derivatives arm of the stock exchange. And I think at the moment, we've basically got, just to say, that 80% of our flow comes from institutions, 20% is from retail, so we're very institutionally focused. We're co-located in LD4. We're one of the 2 crypto exchanges that's in there at the moment. We offer multicast, we've got portfolio margining, so you can offset your futures from your options, and we've got a number of other tools that make us very institutionally focused. In terms of our track record, we've got a track record of protecting clients' assets. So we actually had a hack last week, and 100% of the losses was paid out of client funds. It was exactly the same when we lost money to 3 Arrows in June last year, so we have a very good track record at protecting assets, usually at company expense. We've got less than 100 staff, so we try and stay very lean, and we're basically going to focus on options and trying to be best at the options going forward. So before I start, I just wanted to touch a little bit on what's happened recently in terms of all the kind of being pretty scary. We actually got hacked last week. Quite a lot of the exchanges have recently been hacked. We were hacked for 28 million. It all went on from our hot wallet. So 99% of client assets are in our cold storage, 1% in the hot wallet. And essentially, somebody went in and drained it within minutes. So we are working to try and make sure that this never happens again. Main focus is kind of protecting this, and 100% of this was paid out of our company funds. So going forward, given what's happened in the last couple of days with the Alameda and FTX, it's pretty scary with the lending. I think going forward, exchanges are going to have to be a lot more open about credit lines that they're giving to customers. We mentioned back in June that we've tightened our credit control policies. Regulation definitely needs to come, so definitely need to get regulated, particularly when client assets are at risk, which was obviously the case here. There's a fear in the market at the moment. I think a lot of people have been sort of moving their assets to safe havens. We've been seeing people sort of taking money out, but also we've had a lot of inflows as well. So it's been interesting and quite encouraging to see this as well. So Deribit is definitely a trusted partner, and people are comfortable with us. We just put out an announcement about 5 minutes ago. We've got no exposure to FTX or Alameda. We don't have a trading desk, so we don't trade with client funds, and we are also working on getting a proof of assets like a couple of the other exchanges. So I think going forward we need to make sure that we've got this. So a bit of Deribit background. So we were formed in 2016. Our founder John was an options trader in Amsterdam. Essentially, he wanted to create a crypto exchange. I think he thought it was too late to do spot, so he thought he needed to find a niche, which is why he decided to do options. He went around to all the options traders in Amsterdam and basically said, do you guys want to trade options? It's far too early. Nobody was interested. Nobody wanted to trade it. So he launched a perpetual contract, made money doing that. Essentially, back then, it was, as long as you didn't have outages, it was very easy to gain market share. So managed to gain market share doing that. Our tech setup was always very good. And then 2 years later, some of the market makers that he went to initially came back and said they are ready to trade. So we got people quoting, ex-IMC, ex-Octava basically went and set up their own funds. So we started to get sort of better prices, open interest started to grow, the spreads got better, and then essentially sort of more institutional money started coming into the space, digital asset funds started being set up, And then now the landscape is changing even more, and a lot of traditional players are now getting involved and want to start trading too. So we're seeing kind of the landscape very, very different, and it's really exciting. In terms of customer development, as mentioned earlier, initially it was very much sort of like spin-offs from IMC and Optiva. Then I went into more kind of crypto native funds. Now there's a lot of traditional hedge funds that are entering the space, either setting up sort of separate digital asset desks, or I think in some cases, basically, they're worried about people leaving. A lot of people have left and basically set up their own funds. They want to keep good people, so maybe if they don't fully believe in the upside, they might want to have a desk just to see what's going on, or basically to stop people from leaving. And if it works, I guess they'll start to allocate more assets to that. I think now with sort of traditional finance coming into it, it's getting more exciting. The market's getting better, and we now have 11 million open interest on our books, which is pretty good. BTC has always been higher than, 11 billion. So BTC has always been higher in terms of the open interest, but ETH I think it was in July, it overtook for the first time. So essentially with the ETH merge coming up, ended up overtaking BTC for the first time, which was very exciting. So it just shows there is a chance for other currencies to overtake BTC. In terms of the wider macro landscape and competition, up until now, we basically haven't had any competition. We've got 94%. There are a few other exchanges that we've got, say, 2 or 3% each. But essentially, nothing's really taken off. But now with now kind of in the last, I guess, 6 months, 2 big exchanges have launched their options. So I'm not going to say who they are by name, but one launched in March this year and one launched in June. So I think that the industry is going to get a lot more exciting. There's also some kind of native firms that have set up. They're paying people to try and get liquidity. They're also offering equity. I think that it will be harder for them because I think it takes a lot of time to build up trust, particularly in the industry and what's sort of been happening since June, what happened in the last couple of days. However, I think we are very excited about the competition. I don't think we're going to keep our market share forever. Essentially, competition's good. We want it to come. The market gets bigger. I think they're doing a really good job of trying to educate people. The options is such a tiny part of the market. It's like 1-2% of the whole crypto industry. In traditional finance, it's like 35 times that, so it's huge. So essentially, there's like a massive, massive chance for us to grow and kind of develop that market. And although maybe we kind of have less market share and we have a sort of smaller slice of the pie gets bigger, so we have more of the pie. So we're very much sort of looking forward to everybody joining and creating opportunities like arbitrage strategies and essentially to grow, because there's so many things you can do with options. And you can be speculative, you can use it for hedging, you can trade the volatility. So essentially, I think as the traditional players come in, we'll see this more and more. So what makes people trade options? So since March this year, we've doubled our number of contracts that we've traded. So considering we're coming from a very small base, it's been growing massively. And for us, for options traders, volatility is really good. So essentially yesterday, obviously terrible for the industry, but we had one of our best days. So much trading going on. Back in June when the crisis happened, again, we had some of our best days. So it's, options traders like volatility, and it's good for us. Again, the ETH merge, in the advance of the ETH merge, everybody was trading a lot, and the uprun to that, again, like a lot going on, people kind of taking different bets on what was going to happen. So in June, we had a lot of accounts opening. There were a lot of blow-ups, I think, in the industry. Also, people left and set up their own funds. They saw an opportunity. So that was exciting. And then also you've got institutions who are, use in the bear market, they're basically using options to protect against the downside. So essentially, you're seeing people coming in like that. And then finally, you've just got normal companies like custodians or even miners who essentially it's so volatile. So they'll get their revenue from BTC or ETH, and it's so volatile, and they just want to get some more sort of standardized steady revenues, and so they'll hedge their revenue exposure so that they can kind of pay their staff and pay their bills and not worry about the volatility of the currencies. So changes over the last 12 months. As I alluded to earlier, there's been quite a lot of change in terms of the people that are trading on Deribit, from the initial market makers to the crypto hedge funds, and now to sort of the asset managers and the hedge funds, traditional hedge funds. I think the banks aren't going to come until it gets regulated. The asset managers aren't going to come until it's regulated. They're putting a little bit, they're connecting, they're onboarding, but they're not putting a huge amount of assets. And I think that will change as sort of the custody element trade starts to take a bigger, starts to play a bigger part, because at the moment a lot of traders don't mind keeping their assets on Deribit. Like if you're a market maker or a prop firm, it's very expensive to be with a custodian, but if it's sort of asset managers or banks, they're definitely going to want a third-party custodian. So a lot of the market makers and props that actually used to trade at the stock exchange, they're now trading on Deribit. Again, a lot of them are testing. They've got a lot of work to do to make sure they feel happy with it. But they're coming and they're starting to trade more. And I think the next year or the next 2 years is going to be really interesting to see what happens, because it is a really tiny market. Another thing that I've noticed is due diligence questionnaires. They're awful. Some of you guys are sending them to us now. In the old days, we would onboard you guys. You go through our KYC. It was a very simple process. Now our KYC is a lot stricter. We ask a lot more information than we used to, because essentially what we're trying to do is self-regulate in advance of getting regulated. We want to get regulated. But now you guys are also onboarding us. You're sending these questionnaires, asking ridiculous questions. A lot of them don't make any sense. They're completely not applicable to crypto. But it's starting to get better. So I feel that, in the next sort of few months, I think the questions will hopefully become more standardized. I won't have to answer sort of 3 different types of questions. And moving forward, we're getting processes in place. We're getting all the documents, and we're employing. A lot of crypto exchanges are employing traditional finance compliance people to help with this, and just to make sure that we've got all the processes, because it will help people to get more comfortable with what we're doing, to get people trading more, and especially with what's going on at the moment, just make people feel secure and add to that trust. Finally, another thing is Paradigm. I don't know if you guys know who Paradigm are, but they're a RFQ block trading platform. They're a partner of Deribit. We've grown together. I don't think we would be where we are now without Paradigm. They wouldn't be where they were without us. But essentially, people can trade in sizes. People can trade with counterparties without revealing who they are. And so Paradigm used to be about 10% of our flow a year ago, and now it's about 35%, which just shows, that much bigger institutions are starting to trade. And I think it will probably continue to do developing, and especially as there are competitors who are entering the space, also competitors that are trying to compete with Paradigm and traditional brokers coming in too. So future expectations, firstly, regulation is going to come. It's really important. We need to get regulated, particularly with what's happened over the last couple of days. We've got a regulatory roadmap, so we've got a sort of short-term, medium-term, and long-term plan for what we're going to do. We've got a kind of ex-traditional finance compliance guy that's organizing it. Banks won't enter till it's regulated. The asset managers won't start trading and scale until we get regulated. I think also there'll be a greater use of custodians. We're integrating with Copper. We're integrating with Farblocks. That should be live in a couple of weeks. And I think that we'll have more people that we're integrating with as more traditional guys enter the space. Another thing is prime brokers. There are no traditional prime brokers in the space. I think that there are prime brokers, but they don't do what the prime brokers do in traditional finance. So there's a couple of people who are trying to enter the space and solve that problem. At the moment, you have to have a lot of collateral on the exchange. It's hugely capital inefficient. And essentially, if we can get this prime broking working, essentially they can do the credit lines. They can have all of the assets with them, and therefore you can get capital efficiencies and margin offsets across all the different exchanges. So finally, just to reiterate, the options market is tiny. It's 2% of kind of the wider crypto market. So crypto is still tiny. It's 2% of the crypto market. In traditional finance, it's so much bigger. As I said earlier, so in US equity markets, options are like 35 times that. So if it goes in the same way as traditional finance, we're expecting, it to grow exponentially in the next couple of years. And it's really exciting, and it's exciting that competitors are entering the space. Thank you very much.